Hi, good afternoon. Thank you so much for joining us. I guess there's an echo. Can you hear? Is it okay? Okay. Thank you so much for joining this panel on rethinking climate finance, MDBs, and private sector mobilization. This is a live stream event, so we're not only talking to the people present here, but also back at home that are joining to learn more about what MDBs and private sectors are doing to increase climate finance. We have a very interesting panel where we combine both MDBs, EBRD, and IDB INVEST that work a lot with private sector, with two institutional investors that are going to share their experience on how to mobilize more private capital for climate action. But before we start talking about the how and what we have done in each of our institutions, first, let me introduce myself, Ilan Meirovich, Head of Climate Change at IDB INVEST. And I want to give you a sense of what has happened in the last few years in the MDB community. As MDBs in 2019, we committed, or we wanted to say that we were by 2025 going to lend $50 billion for low and middle income countries. And then we wanted to do $40 billion on private mobilization, as well as overall low income and middle income and high income countries. We were going to set a target of $65 billion, increasing adaptation to $18 billion from $10 billion that we had reached in 2019. So recently, we released our joint MDB climate finance report, where our numbers are beyond what we had committed by 2025 in the second year in a row. For low and middle income countries, we financed $60.9 billion. And if we take into account all the economies of the world, we were nearly reaching the $100 billion. We also mobilized $54 billion, and we did $22 billion for climate adaptation. Of course, this increase in our targets, or surpassing our targets, has to do with a strategy behind it to focus and to prioritize climate action. And part of the conversation today is how all of us partner and increase our climate action, surpassing maybe some of our original targets. So before we start the conversation, let me tell you who is here, who is in this panel. And then I will ask each of you to talk about 2 minutes about each of your institutions and what are you doing, what's your climate finance approach. So we have Soha El-Turki. She's the Vice President of Finance at EBRD. Manfred Shepherds. He is the founder and CEO of ILX Management BV. Marc-André Blanchard, Executive Vice President and Head of CDPQ Global and Global Head of Sustainability at CDPQ. And we were supposed to have James Creven, but you know, our CEO at IDB INVEST, but you know how these panels work. Things get tied up, but we got a best replacement because he is Gabriel Acevedo. He's our Chief Strategy Officer and Chief Sustainability Officer. So he has, as James always says, he has 2 S's. So let's start with you, Soha. Tell us a little bit about what you're doing in your organization with respect to climate finance.
Sure. Just quickly about the EBRD, we've been established 30 years with the focus on transforming the countries in which we operate, or helping them transition towards market-oriented economies. And we're very much focused on helping the private sector and entrepreneurs. We work in Central and Eastern Europe, in parts of the Middle East, in Turkey, in the Caucasus. And we're primarily private sector focused. So 3/4 of what we do is focused on the private sector. So this allows us to play a role of kind of being a bridge between the private sector and the public sector. And we capitalize on that in a big way. Our fundamental belief is that private investments will not flow to emerging markets unless you work on the groundwork, ensuring that the market is ready from a regulatory perspective, from a political commitment perspective, etc. And we focus on that in a big way. We also focus on the Paris alignment. We've committed to align over all of our activities and our investments to the Paris Agreement. And in doing so, and in doing our investments in our countries, we also ensure that what they do is Paris aligned. So we help them towards that path. So at a very high level, these are kind of the things, policy work, Paris alignment, etc., that we focus on.
Super. Manfred, tell us about ILX.
So thank you for inviting me to take part in the panel. Yeah, ILX, we are a Amsterdam-based private credit manager. In my previous life, I was at the EBRD for 10 years, and we started last year, so we were very young. And we have a very specific strategy that's very relevant for the COP discussions these days, in that we only co-finance with the Multilateral Development Banks and some of the DFIs in their private sector operations. And of course, most of them are now geared towards climate finance. And we do that on behalf of 3 leading Dutch pension funds. We now manage over 1 billion. And we've been going for the past year and a half, and now we're already nearly fully invested. So the strategy is fully aligned with all the announcements and commitments that are being made here in Dubai.
Marc-Andre, tell us about CDPQ.
Yes, thank you. Thank you for being here. CDPQ is a Canadian, is a pension fund that is associated with depositors from the province of Quebec. We are the institutional investors with $425 billion Canadian dollars of assets under management. We invest in all asset classes. We actually have a very, we were the first pension funds to come out in 2017 with the climate strategy. We refreshed that 2 years ago. We basically, the pillars of our strategy is we have the strategy to actually triple from the base of 2017 our green assets. We are now at $47 billion of green assets. We have another $37 billion that is actually aligned with science-based decarbonization targets. So we're very proud of that. We have the second pillar is reduce our carbon footprint. So we have a 60% reduction objective of reducing our carbon footprint by 2030 from our baseline of 2017. So we are now at 53%, so we're almost there. The third is we have a transition envelope that allows us to actually, when it's aligned with SBTI or other certified third-party validators, we actually allow for a certain period of time to increase our carbon footprint to actually decarbonize some of our assets. And the fourth, we exited oil production. We have now no more investments in oil production. So that was done in 2022. Where I see the future for us is in how we invest. So on the offensive, and the one of the things, we've been a very strong advocate of blended finance worldwide. We have some blended finance investment in Canada, but now we believe that that's the way to go, where the risk return equation is just not right. We need to talk about, how do we partner with other partners to make it appealing to us. And the other part is for an asset managers like us, is to actually engage with our portfolio company. And we do that in all sorts of ways to make sure that they are aligned with the Paris Agreement and that they're on their way to decarbonization.
Thank you. We'll touch on the counterparty approach because I think most of us are engaging in that. But Gabriel, just
Thanks,
small
Elin,
introduction.
and no, thanks everyone for being here. It's a pleasure, and I want to thank the panelists on behalf of IDB for being here with us. Elin spoke at the beginning about the recent report from MDBs, right? And in one hand, we are all proud being MDBs for having surpasses the objectives that we had set ourselves to achieve. On the other hand, no, the world realized that billions are not enough. We really need to scale this up to trillions. And to scale this up to trillions, we need to unlock private capital. It's the only way that we're going to be there. So that requires repositioning ourselves as MDBs. And what we've heard from the G20, coming out of New Delhi, it's a call for bigger and better. Bigger is important because to take more risk, we need to be bigger. But better, I don't think the G20 is telling us to be bigger to do more of the same. They are telling us be bigger to do better, to do differently, to innovate. And that's what we are trying to do at IDB Invest. We have really started this process a couple of years ago. We presented a new business vision to our board and to our governors. Last year it was approved, and we are on the verge of, in the Dominican Republic, in our annual meeting, to approve our new business model, in which we're positioning ourselves much more as a catalyst than an investor, as a facilitator to unlock private capital. We are calling it originate to share model, in which really we want to use our regional presence, the synergies within the IDB group, and it was mentioned what happens in the EBRD, public-private. We have the same benefits being the regional bank and working very closely with our sister institution, the IDB, that's working with the government. So we can really become a platform for channeling more investment. That also comes with walking the talk. And walking the talk for us means being more ambitious. So we intend to raise our level of ambition on climate finance quite significantly. I'm not going to give you a number now, but it is going to be quite significantly. And it's going to put us on the first tier of the MDB world. And this is only possible thanks to Elin and her team and our colleagues that have allowed us to have this level of ambition. So, it's great to be here and to engage in this discussion.
Thank you, Gabriel. So I know, Marc-André, that you just released a report that calls and includes recommendations for a call for action, right? And it's a call for action that it includes SMI, GFANS, GISD. Can you walk us through the main recommendations of that report?
Yes, well, it was, let's say, the work started 18 months, 2 years ago, where we were asked often, okay, what does it take for you institutional investors to come to the table? Because, institutional investors did not really exist in 1948, 50, 52, when the Bretton Woods institutions were put in place. The MDBs, most of them are not providing us with tools to actually contribute to our investments. So we said, okay, what does it take? And yet we're 900 times bigger than all of the MDBs together. We need to align the capital from institutional investors. If not, we won't get there. So we need to find ways. We're 900 times bigger. So it's a huge. I'm not saying that all of the capital will be aligned, but you have to align just a piece of it, and you could do miracles. So how are we going to do that? Because we have fiduciary obligations, and 6 million people from Quebec are expecting us to provide them with a pension when they retire. So we're not in the philanthropic business. We need to have a return. So, but yet we recognize we have a role to play. We want to contribute to not only to the fight against climate change, but also we recognize if there's no transition in the South, there will not be any transition. So what are it's very simple. We said that the main recommendation is we need to ramp up the efforts to build a robust pipeline of bankable projects. So really, there's not enough projects. I mean, there's not enough projects in developed markets. There's not enough projects in the developing world for sure. The second is actually scale up the pools of available catalytic capital that is available for us, or for think about first loss. Think about foreign exchange risk. I'll just give you an example. At CDPQ in the last 5 years, each of the last 5 years, 25% of our returns have been eaten up by the foreign exchange risk in emerging markets. So this is substantial. This is something we need to address. And there's some mechanism that exists for foreign exchange, but they're not at scale and they're too expensive. The other part is the availability of data. MDBs have experience and data that actually would lower the cost of capital, would actually make us assess the risk way lower than it really is. You have to understand that, like, for example, CDPQ, and I'll finish on that, our venture in emerging market is only 6-7 years old. We know fairly little about emerging markets. And we need data, we need information, we need, and so that's why we've been asking for the GEMS database to be actually available to all institutional investors. And it's a good example, because I think there's a genuine willingness on the part of the MDBs to make it available. But we've been talking about it for 18 months now, and yet it's still not available, because there's all sorts of things that need to be done. But it just shows you we need to work at a different speed, all of us together. And we need to have a level of trust between all of the parties to this way better than we do at the moment. And so those were the main requests. And the music is very good. And if we succeed, we'll dance. Thank you.
Yeah, this is a competition apparently, but we need more collaboration more than competition, right?
No, totally. And I must say that IDB is one of the best on the collaboration side. So I just want to say it.
Thank you, Marc-André. There are two things that you mentioned. First, robust bankable project pipeline, and you also talked about scalability. So maybe I'll ask you about projects and then you about scalability. How do you do in practice? How does the climate finance that you talked about looks in practice when you want to mobilize private sector?
Okay, let me look. Our climate finance approach, it rests on 3 pillars, right? There is the policy work that I spoke about, which allows us to build the regulatory environment, which will enable green finance, investors, etc. There's our own investments. And there's also the channeling of concessional finance, which we do from donors, bilateral donors, or international climate funds, etc. Those need to work together, right? So any component on its own, it really works together as a full package. And there are a number of challenges that are huge in our countries, and you need to kind of find a balance that will allow people to crack through those challenges. So before we talk, I mean, we always talk about mobilization, bringing investors in, new products, etc. But we're really focused on the groundwork of the policy work. So, for example, let me give you some examples when it comes to what we do on the policy side. For example, we work a lot on raising the climate ambition. We're helping countries raise their climate ambitions, updating their nationally determined contributions, developing low carbon pathways for hard to abate sectors. All of these are important to give comfort and direction to the private sector. For example, through the Network for Greening the Financial System, we work with regulators, we work with central banks to shape the standards for green finance, and all of these are important elements. On another front, we work with the local banks to, developing their Paris alignment goals, on developing their lending policies, risk management, etc., which is absolutely also important part of the puzzle. Naturally, work with the private sector We bring them in with our deals. We provide our local knowledge, etc. So these are all kind of examples that show you how, as MDBs, we kind of work between the private sector and the public sector to develop the regulatory environment, etc. Now, like I said, I think our greatest success is when we have been able to combine all elements: policy, investment, and channeling concessional financing. And this has really shown itself in the country sector platforms. So in the country sector platforms, what you do is you combine these elements and you implement them together with the host country in the driving seat. And you keep all stakeholders focused on a tangible pipeline of potential investments. And then we act as the delivery partners. One example, and the private sector gets mobilized along the way. One very tangible example is Egypt launched at the last COP their approach for NWAFI, or the Nexus for Water, Food, or Energy. We helped them to launch the energy pillar. And within that initiative, they've committed to launching 10 gigawatts of new renewable energy, decommissioning 5 gigawatts of old fossil fuels. We worked on channeling $500 million in donor funding and concessional finance to support investments, support technical assistance. And alongside all of that, we expect that there will be significant mobilization of private investments, up to possibly 10 billion from the private sector. So anyway, this is an example which shows the importance of following a holistic approach, which will help develop, the environment for climate finance, but also bring in the private sector within the equation.
Thank you. And I would like to know if that's scalable. I think that the question is, to get to the trillions, I think it's very important to do that kind of work, because without the enabling environment, we won't be able to do that. If we don't put all the different parts together, we won't be able to get to impact. But how do we scale?
Okay, well, I think we are at the beginning of actually unlocking a significant new way of finance. The way of finance of the past doesn't suit the transition we're living through. Whether or not it's the conventional banking system, the capital markets, it's not delivering. And it's clear that the multilateral development banks and the development banks globally are going to play a key role over the coming decade. And there is no choice. This is it. And at the same time, if you look at the developed market and the sovereign wealth funds in general, I mean, to Marc-André's point, there's probably, and there's different statistics, but between 35 and 50 trillion pension assets and sovereign wealth assets. These are assets that can take risk and that can take long-term investment decisions. And so, our strategy and the scalability of it is basically built on 5 pillars. The first is the pillar of pipeline. It's clear that across the MDB system, there is a significant pipeline growth that has to be generated, and it will be generated with all the support from shareholders, all the initiatives and project preparation, and the environment to do it. And we've seen it already. We're very young, but already this year we are a very significant co-financier for both the IDBI and the EBRD. With IDBI, we have done projects in Colombia, Dominican Republic, Brazil, Ecuador, across renewable, agribusiness, logistics. I mean, as if we've been around for years. This is all within the past 12 months. With the EBRD, we've done projects in Turkey, Egypt, Uzbekistan, Azerbaijan. These are projects we could never find via the capital market. In renewables, in Turkey, in municipal infrastructure, and in the financial sector. So it's clear that, and the same applies to the Asian Development Bank, the African Development Bank, and the IFC. We've analyzed 172 projects, and our portfolio will be complete with 40 projects. So there's plenty of pipeline. Secondly is the return and the risk. The GEMS data has demonstrated, we were involved in its early creation through the EBRD. The GEMS data plus the return data has demonstrated that the private sector development finance asset class in the long run has outperformed other sub-investment grade asset classes. The problem is this data is not very well known. As Marc-André says, the GEMS data is not yet public, but these are kind of inconvenient obstacles that we need to overcome to demonstrate the scalability of the asset class. Fourthly is the de-risking. The MDBs, their focus and their role in life over the past 50 years has been to de-risk environmental risk, social risk, governance risks, issues around corruption, the rule of law. This is what they do, and they're very, very good at it. Fourthly is the impact. The whole issue around the Sustainable Development Goals, which I think in all the discussions also here in Dubai, it's clear. It's not only about climate change, it's also about development. So the SDGs remain as important as climate. But also climate, I mean, the joint MDB report on climate finance has been mentioned by both, by Gabriel. It's clear that these institutions are going to be the climate financiers over the coming decade in emerging markets. And the fifth point that I'll make is the MDB system. And this is not mentioned a lot, but they are international financial institutions. They have privileges and immunities in terms of convertibility risk, in terms of their legal status in the countries in which they work. They have local offices. They have certain exemptions that really help pension funds that are tax exempt. And the loans, the participations we get from the MDBs are also tax exempt. Not to avoid tax, but just to facilitate the system. We benefit from it, or not we, our pension funds benefit from that. But this is not spoken about, this IFI status, very scalable. The loans that we invest in are off balance sheet, they're not on balance sheet anymore. And we take full pari passu risk. So this issue of blending, I mean, we debated a lot, but I call working with MDBs, I call it the big blend. And it's super simple. We shouldn't over-engineer with securitization and slicing and dicing. I was very much involved in the financial system in the run-up to the financial crisis. The slicing and dicing caused a big problem in 2008. So we must avoid to bring into the development finance world the slicing and dicing that cause problems in financial. So simplicity. So the three things I find really important, and the fourth one I'll mention with some delicacy, is transparency, standardization, harmonization. Really, really important for the scale up of the asset class. And what should be avoided is opaque concessionality. That is lurking around in Dubai. There's a lot of opaque concessionality being discussed, and it will not help. It will cause further cloudiness that will prevent the scaling up of the asset class. So I think I will stop there, but I'm very confident that the scaling up is available if we all work together on that.
No, thank you so much for those points. I think that transparency, simplicity are critical as well. But one point that was mentioned before, and I want to ask you, Gabriel, a little bit more about, is counterparty. I mean, it's not only that we do the financing to a specific project, but we do have to look at the counterparty, at the company we work with, to raise their ambition, to raise their standards. And all of you mentioned it, that in some way, shape, or form, you're working with a counterparty. Tell us a little bit about this work. What have you learned? And especially because you have done all these environmental and social safeguards, but you have gone beyond that. Tell us a little bit about that.
No, thanks. And before I go to your question, it's great to hear that IDB Invest is one of the best. So hopefully next COP, you're going to tell the world that we have done even better. I don't want to put you in the hot seat to say that we are the best, so no, even better. But hopefully it's going to be next. But no, you think? Wow, that's great. So no, and again, okay, no, I mean they're best with us. EBRD is best with us. We operate in different environments. So, but I think. No, what I can tell about what we've learned, Eileen, I think it relates to much of what was said here. Trust, simplicity, harmonization, and how that can drive companies and clients to align their own business strategies and their objectives with our own vision about what we are trying to achieve. We've talked a lot about billions to trillions here today, but The trillions are just a means. They are not the end. That's not what we are trying to achieve at the end, right? You need your return because you have 6 million people in Quebec that needed to retire. You need your return, but at the end, what we are trying to also or mainly do is to generate the impact and create the future that we all want to achieve. So what we've learned with our clients and that most of their constituents, their governors, their shareholders, the whole world, look at what's happening here and how many people are here. They're all moving towards the idea of impact. They're all moving towards the idea of being able to associate their business results and their business strategies to achieving something more. And what we've been trying to do at IDB Invest is not only to work with our clients in the helping them with the development of the business strategies, but it's also helping them to be able to monitor, to establish, to estimate very transparently. Again, investors use us talking about the importance of transparency and data. So that's what we are trying to do, what we call Delta, a measure of impact. It's really to help our clients to estimate the impact of what these projects are achieving, not only before, but during and after the projects. And when we talked about our business, our new business model that we talked earlier in this conversation, what we want to do is to advance this impact measurement framework even further, to be able to really capture the intricacies of different sectors, different geographies in the best possible way, and to make that information available as transparently as possible, not only to our clients so they can benchmark themselves, but also to investors like yourselves that may want to join us in other deals. And just to finalize, because the panel talked so much about trust, I think that's the other thing that's very important. And I want to go back to an example that relates to what you asked, Keelan, that we had actually with CDPQ, and I was very, very involved. We started to work together on our first joint collaboration with CDPQ in a very complex project in Colombia. And I was involved from the outset. And I am a witness how we're able to build in trust, to rely more and more on each other, and how the dialogue between ourselves, but also between ourselves and the client, evolved in a very positive way. And even though the outcome was not the ideal outcome for us, and we are not in the deal anymore, fortunately, and I think that because of us and because of the trust that we're able to bring to the table, not only between ourselves, but the other financiers, the project is being completed and ultimately is going to generate its objectives, which is the impact that we wanted. So I think that it's another lesson, how we develop a higher level of trust so that we're able to collaborate and to do more together.
So let me ask you, you've seen different models, you told us about the country platforms that you're working on, but what do you see as the frontier? Where would you want to see EBRD going?
Well, I think EBRD has the ability to play a very important role in this journey, because I think we have, by having key strength in the areas of balancing out the pieces of the pie, I think we would want to continue to be at the forefront of supporting the private sector in coming, mobilizing in our countries. And I think with the innovations and the initiative we have, we will continue doing that. I think we need to continue engaging with the private sector and finding solutions, because there are investors where we've been able to find appropriate products and solve maybe some of the issues they have, but there are other groups which more work is needed. I completely agree with Mark and Manfred when we talk about data and sharing MDB data, because at the end of the day, if sometimes we're kind of, sometimes there's a bit of frustration in the need for de-risking from the private sector, which almost means that they're taking an MDB risk, not really the market risk on the actual credit risk of the loans we have. But then the solution is we need to make sure that they understand the actual risk return trade-offs, and we need to provide that data. And yes, it has been probably a little slower than what any of us want, but I think the important thing that I think in the last year and a half, I think the the narrative has changed and the interest in moving forward faster has changed. So I think I shared, Mark, I told you in a different panel that we're hopefully going to, as a group, MDBs, hopefully by Q1 of next year, we'll be able to share more of the GEMS data. And you need to continue doing that to be able to bring on more investors.
So we're almost at the end of our conversation, a small conversation. I think we could continue talking about this for a long time. But I've heard in one of the panels that we need the type of change that we saw through the Industrial Revolution, but at the pace of the digital revolution, right? And so we have to combine this. And so if I think about the 18 months is too long, right? So in the next 12 months, what each one of you want to see happening? Let's start with you, Gabriel.
Well, I think I told you what we want to see happening at the beginning of the first answer, right? We want to see our new business model receive, strong and support from our shareholders, and we want to prove that it can be implemented. So we wanted to be at a position at the end of next year of really taking this next step on our evolution as an MDB.
I would like to see. I think we've made a lot of progress, despite. I think we all need to work together. We don't know each other, and we come sometimes from Saturn and Mars, and I mean, like, so it's something. So in a year, I'll give you an example. We just joined Brookfield, or as an intention, but let's hope that we'll be able to go to the close on a fund that with Lunate here in the context of the UAE, where Lunate is providing catalytic capital in a fund for infrastructure in emerging markets, with Brookfield and Temasek and CDPQ, a fund that we hope will be between $4 and $5 billion. I would hope that within a year, and to do what we need to be doing, we will need some further de-risking instruments, because we want to do things that CDPQ would not do on its own, or Brookfield or others. And so I hope that either with a partnership with IDB or some other places, we'll have some further catalytic capital, and where we will have, within a year, have identified an opportunity, actually have pulled the stack of capital needed together, and that actually we would be in the process of announcing it now, that we would have a substantial project somewhere.
Well, we're very fortuitous in that our first fund is nearly fully invested. We're launching a 2 to potentially 3 billion fund to follow the same strategy we have. We hope we can have conversations also with institutions like CDPQ, because we are a very simple fund that doesn't necessarily rely on concessional funding, but it's proven to be robust and very scalable. And the pipeline from the MDBs is very significant across all the 5 MDBs, the IDBI, the EBRD, but also IFC, ADB, and FDB. So the pipeline is there for a large fund. I think what we're looking for is for the pension fund sector, the regulators of it, to feel comfortable that they can trust the sector, and that we don't have to all the time be afraid to take step forwards. CDPQ is very brave in investing in the equity funds in relation to climate. There's a lot more that can be done. So that's my real hope, that on the back of a COP like that, these pension funds that are so well endowed can take the step to work more with the MDBs that really are good institutions and have a big and a very important role to play.
Look, I mean, I echo everything that was said. I can tell you what I hope to achieve as an institution, but to be honest, as an individual who's been part of COPs and other conversations, I think one of the biggest challenges that I hope we find our way through is the fact that there are a lot of discussions, and we talk about the issues a lot, but we almost all know them at different levels. And I think there must be a way, or hopefully, where we kind of focus, the discussions to address specific problems, jointly between the MDBs, the governments, the private sector, etc. There are fundamental issues that need to be resolved, and it cannot be resolved by one or two institutions on their own. From an EBRD perspective, I mean, we are continue to, like I said, we have a huge focus on the policy side. The country sector platforms is one very efficient way of doing it, and we will look to, grow that more. On the mobilization side, we hope to continue our collaboration with the private sector, using new tools, launching new products, engaging with investors more to continue on this path. And hopefully as a collective MDBs, I think this data sharing element, if it happens within the next months, I think that could be a significant push forward.
Well, from my side, my hope is that next COP we have very good examples of deals that can be mobilizing private capital. So actual deals on the ground. So thank you so much for coming. Thank you so much for joining live on the stream and here. And let's continue the conversation. Thank you so much.